Alrighty guys, this is how I made $16,000 day trading the S&P 500 this morning. So today was actually against my bias, but I was able to reevaluate my bias and take this winning trade that actually ended up being super good. So the first thing that I wanted to note was that we had this big ass new week opening gap that hadn't been filled on Nasdaq, and we were waiting to get filled on Nasdaq like literally all the way up until today, and today is obviously the last day of the week, and we finally ended up filling that. So I had a bullish bias on Nasdaq. What I wanted though, and this is kind of where my bias got flipped a little bit, or not flipped, but messed up a little bit. I wanted these London session lows to get taken out. And something that I didn't notice was that we had these hourly lows right here that already got swept and then caused that upward movement on both the S&P and on Nasdaq. So the entire time I was like, man, I want these London session lows, or even these like these hourly lows down here. And I was super set on, I want London session lows to get taken out before we can go up and start looking for any of these draws on liquidity, or even like this hourly order block up here, which was my final take profit. But we didn't end up getting that, and when market opened, we can see during pre-market we already broke 5-minute structure after taking out those hourly lows, and then following that we literally just maintained 5-minute order flow throughout all of this. Order flow is probably like fuck it, I'll make a YouTube video on order flow, or fuck it, I'll make a YouTube video on like how I've been trading recently, even though it's the same exact strategy with like just some adjustments. But order flow is literally everything. If you can look at the 5-minute and understand its order flow and what's being respected versus disrespected, then you know where the market's going to go, especially when you pair it with liquidity sweeps. So we see liquidity sweep, then cool, we get boom, bearish order flow gets broken. We start creating bullish order flow. We come down into this breaker block, we respect it, and then boom, this is when market, this is actually 35, or come on, man. This is 5 minutes into market open, and we break 5-minute structure to the upside, and then we maintain 5-minute bullish order flow by closing this candle to the upside. And then from there, it's like, okay, we retrace down, we fill in this 5-minute, I mean, I don't know what you want to call this. You could call this supply and demand, whatever, like this down candle, whatever. But regardless, it comes through, it hits equilibrium on the 5-minute. Okay, we come and hit equilibrium, and then from there, I'm looking for 1-minute entries. And where was my 1-minute entry? It was off of this inverse fair value gap. Like, it's so easy, oh my God. It's so easy, bro. Ugh, so easy. Liquidity sweep, 5-minute break of structure, 5-minute order flow gets maintained. And if we're maintaining 5-minute bullish order flow, do you really think we're going to break 5-minute structure, maintain 5-minute order flow, and then come down and then start creating bullish order flow on the 1-minute again just for us to reverse down? Fuck no, especially when we have these London session highs, especially when we have these hourly highs. And this was a little bit ambitious, but I still held to full take profit. This was an hourly order block. But do you really think that we're going to come down, sweep out a draw on liquidity, break 5-minute structure, maintain 5-minute bullish order flow, respect 5-minute bullish order flow, and then by the time that we come down here and then inverse this 1-minute fair value gap, like on what earth is this going to be a bearish scenario? It's not. It's not at all. We end up, boom, inversing this gap. Awesome. Boom. I entered off that. I put my stops underneath. Bro, this shit is so clean. I put my stops underneath this fair value gap because this is really the only confluence that we had that was like protecting the 1-minute bullish order flow that we ended up forming after sweeping out these lows and then getting that inverse fair value gap. So I just put it underneath this gap. We come down, we respect this gap, and you could have entered off of this if you wanted like some extra sanity or some extra clarity. I was going to take profit off of these London session highs, but I decided not to and decided to move my take profit up to these hourly highs just because I saw the way that Nasdaq was moving and Nasdaq was ripping, and I was like, okay, Nasdaq's probably going to want to fill in this this gap from the week prior, or from the start of this week. And if Nasdaq wants to go fill that gap, then that means ES is probably going to come up and take out these highs, fill in this 1 hour gap, and then potentially even come through and hit this order block. So I was kind of thinking like, okay, the high time frame, we're remaining in bullish structure, we're maintaining bullish order flow. We just swept out these hourly lows. Do I really think we're going to sweep out these hourly lows, then come up, sweep out these hourly highs, and then rotate back down? Like, fuck no, it's just not going to happen. So we see the sweep of this, we take out these highs. I don't really care about it. I'm focusing on these hourly highs next, and then I mark out this hourly order block. Pretty obvious that this is the order block. And that wrapped it up for my trade. It was super easy, super simple. And again, this is something that I was telling you guys in the last trade recap video, where you have to be adaptable to your bias. Did I want London session lows to get swept out for me to be able to take longs? Yes, I did. Did they get swept out? No. But what did we have? We had an hourly low that got swept out. And then following that, like, we have to be able to be looking at order flow and look at what price gives us to be able to make a sound decision. So like, if price comes down and sweeps out these hourly lows, and then like, too bad, so sad that we don't sweep out these London session lows that I really wanted to be swept out. If price gives us a reason to go long, you better fucking go long. If price is giving you reasoning to go short, you better press the short button. Not just like because, oh, I'm so mad because I wanted this low to get hit and not this one. It doesn't matter what you wanted. Okay, so let's look at Nasdaq now. Nasdaq didn't provide me with an entry because it just moved way quicker, but it was the same situation. We had these hourly lows, we come down, we sweep them out, we get a 5-minute break of structure right here, and then boom, we maintain 5-minute order flow. That's the biggest thing. We come down, we sweep out a low, and then we break 5-minute structure to the upside, and then following that, the most important thing is that we maintain and get that continuation of 5-minute order flow after the break of structure. So we get that break of structure, and then after that, boom, we come down, we come into this order block, we come into this breaker block. We hit equilibrium, and then what do we get? Boom, following candle up from there. And then after that, like, boom, we had already taken out these London session highs. Awesome. Where's our next target, and where's the most obvious target that we wanted for Nasdaq in the first place? This new week opening gap. And then boom, price just bull runs straight to that. And that's what helped me for my bias for this S&P 500 trade, because the S&P 500 was lagging behind Nasdaq. Nasdaq was like already all the way the fuck up here. Like by the time I was taking that trade on ES, I took that trade on ES right around like 950. So when Nasdaq hit 950, it had literally already pushed so far past London session highs. Versus on ES, we didn't even come up to London session highs yet. So yeah, today was beautiful. I looked at yesterday's price action. Yesterday's price action was beautiful as well. Fuck it, I might as well go over that with you guys too, because I know a lot of people were saying that they wanted me to go over that. So we can go over yesterday's price action. Yesterday's price action was really good. We're doing extra work for you guys here. So we have Thursday. It's so cool to see like people's progression in trading, or you know what's cool to me? Seeing retail traders progress so much further now with the mentors that we have in the space. Or maybe it's just because I'm way deeper in the day trading space now than I was when I was a student, but I genuinely feel like the students in day trading now are high key in a much better spot than they were when I was learning how to trade. That's how I feel about all this. And it makes me feel good because I'm one of those people that was able to like help this shit go and move. Running new man back. All right, lit. This is pretty much all we need. Okay, so this one was another pretty easy one. Okay, we have London session highs, London session lows, Asian session lows. London had already taken out these highs. Right when New York market opens, we manipulate up, we sweep out London session highs. Then what do we get? Our first invalidation of bearish order flow, which is this inverse fair value gap. From there, what am I looking for? I'm looking for some sort of continuation. So what are our continuation confluences? Well, we have a fair value gap right here. This gets filled. Okay, from there, I would be looking to scale into the 1 minute time frame. Okay, We get this filled, and then when do we finally get an invalidation? It would literally be just on this inverse fair value gap right here. Boom. It's like baby food. Oops, that's a long. Honestly, I would keep my stop loss above this 5 minute fair value gap, just because we get a decent enough take profit towards these London session lows to give us to give this trade some room to wiggle. And then yeah, 1 take profit, 2 take profit. There weren't any other like high time frame lows that we could have targeted. This is like, bro, this is free bread, and you probably could have gotten a much better risk reward ratio if you wanted to play it a little bit more risky and say that, okay, once we got this filled and got this inverse fair value gap, then boom, you can enter off that. I probably would have played it a little bit more safe and toss it above that 5 minute fair value gap. Now let's talk about Thrax pack. Again, okay, before we go, let me show you guys. Liquidity sweep. We're looking for, following the liquidity sweep, we're looking for a change in bullish order flow because we just swept liquidity to the upside. How do we see a change in bullish order flow? By either a break of structure or an inverse fair value gap. We get an inverse fair value gap. Following that, what are we looking for? We're looking for a continuation confluence showing bullish order flow get respected. What do we have? We have a fair value gap. It gets filled. We scale down to the 1 minute time frame, and then all that I'm looking for is either a break of structure or an inverse fair value gap on the 1 minute, and then boom, price just rotates down from there. Literally free bands every day. It's free bands. It's free fucking bands, bro. Okay, let's go look at Thrax pack. Same exact situation. ES probably would have been my preferred trade for the day, but same situation. London session highs. Like, do you see it? Do you see it? London session highs. Let's find these Asian persuasion lows. Okay, same situation. Market opens. We come up. We sweep out one of our key levels, our draw on liquidity. From there, what do we get? Inverse fair value gap. From there, what are we looking for? Some sort of continuation. We have this breaker block right here. We have this order block right here. We also have a fair value gap right here. Okay, price comes into the fair value gap, price comes into the breaker block. Scale down. See, for me, I probably wouldn't have wanted to take these shorts on Nasdaq though, because we had already taken out these London session lows. But still, we come down. We fill the breaker, we fill the fair value gap, and we actually maintain bear. Oh wait, no, sorry. We broke structure to the upside right here. So I would need to be looking for either a 1 minute break of structure to the downside or a 1 minute inverse fair value gap. And a little pro tip for you guys: if we have, because we have this bullish fair value gap, you're probably saying, oh yeah, we inverse this gap. That's not enough for me. If we have bullish fair value gap, I want to see the second, like the last one on the stack of fair value gaps get invalidated. So yeah, we invalidated on this candle right here. We don't have a fair value gap right here. So yeah, you're either entering off of this candle right here, off that invalidation, maybe you throw your stops above there. One and only take profit right here, free bands. Or you take it on the break of structure from right here. Stop loss, maybe you toss it up here. Same situation, free bands. 1 to 1.5 risk reward ratio, 1 to pretty much 2 risk reward ratio. Yes. 1 to 2.78 risk reward ratio. Boom. Plain and simple. This shit happens damn near every single day, and the days that it doesn't happen, you don't trade. The days that you happen, you place the fucking trade and you make some fucking money. All right, bros. Hopefully you guys learned from this. I appreciate you guys. If you guys want to see me mark the shit up live, I do this every single morning at 9 a.m. Eastern time. on Kick. I'm literally the biggest freaking trading streamer there is on that shit. So go follow and turn notifications on every single morning, 9 a.m. Eastern time. And if you guys want to get mentored by me, learn more about these confluences, learn more about how I do all of this shit and actually get taught by me, coached by me for a really long time, there's going to be a link in the description for that as well. I love you guys. I'll catch you guys in the next one. Peace out.